Well, thanks very much, Kevin. And first, I want to thank IBF and Life Science Alley for inviting me here to talk a little bit about what's going on in Washington as it impacts the medtech space. Clearly, in the 30 or so minutes we have, I won't be able to cover all the issues. But I think, as you're all well aware, the impact that policy, particularly policy coming out of Washington, has on your ability to invest and innovate has probably never been greater. Really what I want to do is kind of highlight some of the issues that we've been working on. I think some of the progress has been made in some areas, work that still remains. But really, if I can leave you with one message, it is that you all can impact this process. Your voice is very important to the debate in Washington. Your small business, your job creators, you're improving patient care. And so I know at certain times it feels like you're out there alone trying to work on your technologies, but I would implore you that your voice is very important to the discussion. And it needs to be heard. I'll also say at the outset that for the most part, I'm simply the messenger here. I'm not a member of Congress, so please don't hold me, even though I'm from Washington, don't hold me responsible for many of the policies coming out of there. But I will say, because of many of the people in this room, and again, our strong partnership with Life Science Alley, I think you'll see here we have made important steps and improvements and enhancements trying to shape some of the policies that directly impact our space. So just briefly, I think Kevin did a great job summarizing it. And again, I didn't ask for the plug, but I appreciate that as well, because the more we can build our army, the stronger the voice is. But the group really was founded in 1992, 20 years ago, when there was a similar, as one of the earlier panels discussed, kind of a similar dynamic. There was a slowdown at the FDA. Small companies felt that their voice needed to be amplified in Washington, and they really made a difference there. And fast forward 20 years, we're close to 300 member companies now, and we're really trying to be the eyes and ears for small companies in Washington, providing advocacy and educational assistance. And I think you'll see that there is a track record of success here. And again, many of you who've directly engaged on these issues have seen that throughout the years. So briefly, what I wanted to start to do, and again over the next course of 30 minutes or so, and please, at any point, if you have questions during any of the presentation, raise your hand. We'll also, kind of break it up into 3 parts here, so at each of the parts as well, we'll pause for questions. Starting with what's going on at the FDA, obviously, this is every 5 years we work through the reauthorization of the user fee program, so that negotiation has been a long effort. I saw Susan Alpert earlier. We spent a lot of time together over the course of last year negotiating that agreement with FDA. There's also legislative efforts up on the Hill that I'll talk about, and administrative changes that FDA is pursuing that impact how companies navigate the FDA. We'll also talk a little bit about the healthcare law, the medical device tax, obviously efforts to repeal that, the Physician Sunshine Payment Act, some of the payment reforms that are underway. But I know that the speaker following me, the session following, and then the keynote luncheon speaker, obviously we're focusing a lot on reimbursement. So while we certainly can field those during Q&A, based upon the agenda, I didn't drill too much down, but I have some macro comments there. And then close out talking about the elections, both at the presidential level, the House and the Senate, and what the lay of the land looks like moving forward. So with FDA, clearly when we look at what the focus and the objective here is to make it a more reasonable, predictable, and efficient process so that patients have timely access to safe and effective products. And this has been a long, as you all know, one of the frustrating things here is that the law regulating medical devices has not changed over the course of the last 5 years or so, but companies' experiences have changed dramatically and for the worse. And so when we're trying to look at root cause of what drives that behavior, I don't think you can point towards a change in the legal system or the law, but more upon those who are implementing the law. And credit to Josh Mackow and a lot of others. We kind of 2+ years ago went out to try to collect data because we went up to the Hill, provided anecdotes. They said we need more data, so aggregated data. And that was kind of the beginning of the ball rolling and the snowball getting larger and larger to where additional studies were done, even by FDA, and started highlighting some of the common themes here about the lack of predictability, transparency, kind of change in reviewers, moving goalposts. And these are things now, quite frankly, that even FDA is embracing and saying, yes, these things are going on. So I think the efforts over the last couple of years have forced FDA to realize that there are some things that need to be improved. In addition to this, there have been changes that FDA has taken administratively that are trying to reform the pre-market review process, and we'll talk about some of the pros and cons there. But really, we're at a critical point here because, as I said, when you have this reauthorization of the user fee program, MEDUFMA, it provides an opportunity, a window in time every 5 years to get some legislative reforms in place as well. And so I think, as you'll see here, all the work that's been done by many of you in this room, LSA, MDMA, others, AdvaMed, have really come together during this window in time right now. And I'll just talk briefly about some of the improvements within the user fee package. So bottom line is that the industry did agree to basically pay $595 million in user fees over the course of the next 5 years. That represents about a doubling of the fees from MEDUFMA 2, but they're structured in such a way that, long story short, there are fees for companies that register with the FDA. Under MEDUFMA 2, there were some exemptions from who had to pay that fee. Now everybody has to pay the fee. So bottom line is companies submitting 510Ks, PMAs, PMA supplements, those application fees will only go up about 5% approximately. So there's not going to be a big hit on an individual company perspective, but by broadening the base, we're giving FDA additional resources. In exchange for those additional resources, FDA has made commitments to improve the pre-market review process. And some of the key ones I'll highlight here, and they're not listed in their entirety, but when we started looking at what we needed to have happen here, and Heather Rosecrans is our Vice President of Regulatory Affairs at MDMA, 30-plus year veteran at FDA, and ran the 510K program for nearly 18 years. And she kind of explained it, when the review starts, you have a funnel, and it's wide here, and as you go along the process, the number of issues should narrow. But now currently it's kind of narrows, and it gets larger and narrows, so there's no predictability. So what can be done to get rid of some of those surprises along the review process? And one of the key ways we feel is that having a more structured pre-submission process with FDA, so that issues are identified at the outset. And right now, when you make commitments are made and you have these meetings, there's no way to memorialize those commitments. So under the MEDUFMA agreement, there'll be meeting minutes that are in place that the industry and FDA will agree to kind of memorialize those agreements. And if FDA wants to deviate them from those commitments down the road, then they'll have to have valid scientific evidence to justify that deviation, and it'll have to have a supervisory oversight. And again, these are some things right now where I think a lot of companies feel that they're held hostage sometimes to the whim of the reviewer. And so the more structure you can put around this process, we think the better off we'll be. Kind of view it as guardrails to the process as the submission goes forward. You also had a situation in the past where if it missed one of the performance goals, it kind of fell in the black hole. Well, you missed your goal, but there's no secondary goal, and so those companies were kind of just out in the ether. Now there's what we're characterizing as a no submission left behind provision, which states that if you miss one of the goals, within a very short time period, I think for 510Ks it's 10 days, for PMAs maybe it's 20 days, FDA and the sponsor will sit down, list out all the outstanding issues, and come up with a roadmap to get a final decision. I think these are things that FDA recognizes they need to close these submissions out, move through them quickly. They're also going to have earlier interactions with the companies. They're going to have major, AI letters or initial responses out to the company within 60 days, not on day 89. So that you actually give that company 30 days to respond and hopefully get that clearance within a 90-day window. Also important here, and we saw the drug space had this when they entered into their user fee negotiation back in 1992. There was an independent assessment that was done that looked about FDA's needs, their processes, ways to improve it, and we really never had that on the device side. And so as part of this agreement, I think a core element here is that there will be an independent assessment conducted of FDA, their processes, procedures, to see how they can improve the pre-market review process. Industry will be actively involved in that project as well. And importantly here, and this is a healthy discussion during the negotiations, it's not, in Washington, oftentimes a report is issued and goes into a filing cabinet. Issuing a report is not that substantial. But the way this is structured, within 6 months of the project being initiated, the independent assessor will issue its high-level recommendations, kind of high-priority recommendations. 6 months after that, so a year later, all the recommendations will be listed. FDA then has 1 year to devise its implementation plan about how it will internalize and incorporate these recommendations into their operations moving forward. And the most important piece of this, I think, and one that we hope will provide real accountability here, is that independent assessor will come back a year later and then basically judge and determine how successful or unsuccessful FDA has been in implementing these recommendations. So this is not just a report for the sake of a report. We really do think it's going to help identify additional enhancements, and the timing of that final report will come out right around the time we'll begin the discussions for a potential MEDUFA 4. There's also going to be more regular and granular reporting. Right now, FDA reports, very high-level information on a quarterly basis, but we really wanted to drill down on some of the specifics, important metrics, get that information on a quarterly basis to really understand trends before they become a problem and hold them a little bit more accountable to their performance. And in fact, it's my understanding that the Hill's working through these bills now, and we'll talk about it in a moment, but I believe that Congress is going to be getting these quarterly reports as well. And so again, that added, more regular, granular reporting, I think, is an attempt to provide more accountability and hold FDA accountable to the commitments they made in this performance report. And then the last item here, it's not listed, but I think it is important, is that we came to an agreement on shared outcome goals, which would not just be quantitative goals based upon FDA days, but they're actually quantitative goals based upon calendar days. So for the first time, there'll be performance. FDA will be measuring themselves based on an actual day, not just on an FDA day. So I think that's an important metric moving forward. All that said, yes, yeah, exactly. So all that said, that last bullet is the whole ball game. We have set the table. We have put I think the processes, the improvements in place, coupled with the legislation we'll talk about, to improve the process moving forward. But success here is singularly dependent upon FDA's ability to implement, execute, and across the organization. If this is just policy on paper and the reviewers aren't trained on it and not implementing it, we're not going to be any better off. But I think, again, part of what we've done here in this more regular and granular reporting is an attempt to ensure that these provisions are realized quickly across the organization and really have that impact that they're intended to. So shifting gears beyond the efforts during the user fee negotiation, as I stated, both the House and the Senate have been very active on looking to reform FDA as well. And this started back, they've had 5 or 6 congressional hearings, hearing from innovators, physician inventors, patients, companies about the impact that the lack of predictability, consistency, transparency that the FDA has had on their ability and your ability to bring products to the market and improve patient care. And interestingly, this is one of those rare areas where it's generated strong bipartisan support in Washington to focus in on issues. Just last week, the Senate Help Committee, which is the committee on the Senate side that has jurisdiction over FDA issues, moved forward with a package that had many reforms in it, including the authorization of the user fees. And amazingly, every member of that committee, but for Bernie Sanders, who is a self-proclaimed socialist from Vermont, voted to approve that package, and it went forward. And just yesterday, the House Energy and Commerce Committee, Health Subcommittee, moved forward their bill, and that was unanimous, and the full committee is taking that up tomorrow. And there's a strong probability that this bill could actually be voted out of the Health, Energy, and Commerce Committee by a vote of 51-0, which in this political environment is unheard of. So I think it shows that this is an issue that's brought Republicans and Democrats together. That's not saying that there hasn't been a healthy negotiation. What I will point out, some of I think the highlights here is that we have been successful working with other organizations, companies, to ensure that some of the more problematic provisions, for example, there was a proposal that basically stated any recalled product could not be used as a predicate device, and the cascading effect of that policy would be devastating to innovation and also lose sight of the fact that that policy wouldn't make products any more safe. That's not incorporated into the final package in the House and the Senate right now, or the bills that have moved forward. There was also a provision that, similar to with PMAs, you have conditional of approval studies that the FDA requires a condition of a PMA approval, a company to conduct post-market studies. They wanted something comparable on the 510K side. We were successful in educating members why that would not be a worthwhile endeavor as well. That's not included in the package. On the positive side, we've seen a lot of enhancements and provisions that reinforce the least burdensome doctrine, ensure that experts can participate in the scientific advisory panel process. That's become a little burdensome for allowing experts to participate. Many of you know the 510K modifications draft guidance that came out from FDA, basically trying to update when a new 510K would need to be filed by a company. Let's just say that they missed the mark in their draft guidance. It would be extraordinarily burdensome if that draft guidance was implemented. So there's legislation that actually formally requires FDA to withdraw that guidance and reissue a guidance in the future after industry input and stakeholder input. You also have legislation that states that if FDA provides a non-approvable in NSC, they can't simply say no. They have to provide you with that scientific justification to the company and has an expedited appeals process. There are a lot of things here baked in to improve the way that industry and FDA interact with one another. And again, it will come down to the execution here. And then I will say on the House side, we were very pleased. As many of you know, the ability or the inability of companies to get an IDE approved over the last few years has increased dramatically. And in large part, this has been driven by a kind of an internal change at FDA that they kind of created a new threshold for an IDE, and they were viewing it that if the IDE wouldn't support a marketing application, they wouldn't approve an IDE, which is not the legal threshold. The House bill would reaffirm that FDA cannot disprove an IDE simply because it wouldn't support a marketing application. So I think, again, those are some of the things that we've been working on with feedback from many of you in this room, and I think will ultimately end up providing a better framework for companies to engage with FDA. But again, it comes down to implementation and execution on FDA's part. And then finally, there's a lot of administrative changes going on. You've heard FDA, issued their report on 510K reform and new science changes. This is from modifications to risk benefit to notice to industry. I mean, there's literally been, I think, 52 action items that they're moving forward on in 35 different pieces. And one of the things we've reiterated thus far, somewhat unsuccessfully, to FDA is that there's already so much uncertainty going on with the industry right now. And you're basically lumping in all these changes at once, compounding that uncertainty. And as a science-based organization, how on God's green earth are you going to actually measure the effect of each of these changes when they're happening concurrently? There's no way you can actually measure which each of these changes are having its desired effect. And so, we have implored upon them to focus on 2 or 3 of the big ticket priority issues and roll those out, execute on those, reassess what else is needed, and kind of take a staged approach. I think they have, heard that in some instances. They're certainly inviting a lot more industry and stakeholder feedback into this process. The fact that they are going to be withdrawing the modifications guidance is certainly important. All this is to say that we are still in a period of great uncertainty. We have encouraged FDA to narrow the focus of the things they're trying to change, and on those they are, try to get some closure sooner rather than later with input, because as long as all these things are going on, the ground underneath, not only all of you is changing, and you don't know what bullseye you're trying to aim for, but you put yourself in the shoes of a reviewer at FDA. 2 years ago, statements were made by folks at FDA that said, the 510K system's broken, we're going to fix it. 2 years have passed. There's been no clear instruction direction about what exactly was broken or what they intend to do to fix it. And if you look at the incentive structure of a reviewer right now, where if things go wrong, you're demonized, this risk aversion is just really at the core of what's going on. And so hopefully, and I will say, final piece on FDA and we'll move forward, what I think we have had success on, through the help, again, of many in this room and patients and others, is sensitizing Dr. Shuren, Commissioner Hamburg, and others, that when FDA's mission is, focusing on protecting patients, it's not just trying to zero out as much risk as possible before that product gets on the market. It's recognizing that if you have unnecessary delays in this product coming to the market, thousands, tens of thousands of patients may be harmed because of those delays. And I think that sensitivity, the other side of the coin there, I think transcatheter valves are a great example. That is slowly entering into the mindset, I think, at FDA. And the more that can become part of that process and that risk-benefit balance comes into play, I think the better off the industry and patients will be moving forward. So I know I covered a lot of ground on FDA, and we'll have time for questions at the end, but I just want to pause right now if there are any questions. If not, I'll move on to the healthcare law. All right, so the Accountable Care Act. Obviously, this was a law that was passed not along bipartisan support. Most significant pieces of legislation end up having a group of constituencies from either side coming over and working on a bipartisan compromise. This was not the case. Yet it is a law of the land right now, and there are certain provisions in here which will have a dramatic effect on healthcare delivery and medical technology companies specifically. And here's just kind of a quick timeline of things that are going to be rolled out over the course of the next 3 years. There's a lot of talk about accountable care organizations, the demo projects. This is the idea that, kind of coordinated delivery of care, integrated delivery of care across the healthcare delivery system. Interestingly here, when you're a vertically integrated system, again, I'm sure the folks later on in other sessions can talk more eloquently than I can, but at least it seems when you're looking at this, if you're a vertically integrated system, implementing an ACO may be able to be successful. But if you have disparate parties here who don't have a financial relationship to one another, and you set up a global payment, and someone's out there trying to allocate who gets what portion of that payment, it seems like you're setting up a significant food fight here. So how applicable ACOs will be outside of those entities that are vertically integrated, I think, is an open question and something they'll be looking at. You also have demonstrations to move towards bundle payments. So again, hospitals are getting paid one silo, physicians out of the other. How do you bundle those two together and have a global episode payment? Again, I think there's a well-intended notion behind that. One of the areas of concern that we have representing medtech companies and innovative, these are not usually incremental companies. These are ones, all the VCs are investing in transformational products that sometimes may have a higher premium on the product, but obviously, expect to have also enhanced outcome for the patient. And making sure that these systems are structured in such a way that if you're only looking at performance 30, 60, 90 days after hospitalization, sometimes that enhanced pricing and the benefit accrues outside that window, so looking at the proper time horizon there. We also have the Physician Payment Sunshine Act, which I'll talk about. I have a separate slide associated with that, where companies need to start collecting their payments they make to physicians. And then the proposed rule for medical device tax, which we just filed comments on. I'll talk about that as well. The excise tax, we'll mention in a moment. It goes into effect January 1st, or it's intended. Right now, the law states that the payments to physicians need to be submitted by March 31st, but I think that will be delayed. And then obviously IPAB, the Independent Payment Advisory Board, is something with the group of 15 folks who are trying to set payment rates and lower the growth of spending. There's also bipartisan support to repeal that. That's set to go into effect in 2014, and then the exchanges as well. But I'm really just going to drill down on the device tax and sunshine for the next 2-3 minutes or 5 minutes or so. And the medical device tax, as was mentioned earlier, this is extraordinary because it is a tax on revenues, not on profits. It's on 2.3% on the top line. We have been consistently opposed to this tax from day one. I mean, little old MDMA, we're running ads, radio ads, print ads in Washington, talking about the adverse impact this would have on innovation patient care. Ultimately, and even some folks who said that they were supporters of the medical device industry said, well, we can't have the whole bill go down. We don't like the tax, but we can't have the whole bill go down. Well, the bill obviously goes through with the tax included. So now, we're basically, the effort has been initiated with the leadership of Congressman Paulson on the House side to repeal this tax as a standalone provision. And we don't view this as a health care issue. This is a tax and job creation issue. I mean, it certainly adversely impacts innovation, patient care, but when you look at the unemployment rate that exists out there, and particularly when you look at the state of Minnesota, and I've had conversations with legislators on both sides of the aisle in the state, and the way I sum it up is, what the autos were to Michigan, MedTech is to Minnesota. And if you want Minnesota to become part of the Rust Belt, sit by and do nothing as it relates to FDA and the device tax. Because if you do nothing on those two issues, unfortunately, these jobs will move out of the state, and it's uncertain in this environment if another industry will fill the big shoes that this industry provides in the state. And so with that context of tying it to not the broader-based healthcare reform, and we can get into whether we think it's a good idea or a bad idea, but tying it directly to jobs, we're trying to depoliticize the issue. And right now we have 232 co-sponsors in the House. We have 22 Senate co-sponsors in the Senate. And it really is, this of all the taxes there, and senior folks in the House and Senate have said this is the one that has risen to the top that we really view as a priority to get rid of. And even when you look out in the press, it's getting a lot of op-eds out there, and I think the latest exhibit is what's happening in Massachusetts. You have Elizabeth Warren, who is one of the most progressive candidates for the U.S. Senate running against Scott Brown, a moderate Republican from Massachusetts. And Senator Brown was just talking about the adverse impact of this tax on jobs, the Commonwealth of Massachusetts. And there were op-eds written. Candidate Warren was asked about this on the campaign trail, and all of a sudden, a couple weeks ago, she wrote an op-ed saying, I'd support the repeal of the medical device tax. And I think that's a signal when you look at other states with a good device footprint, like Minnesota, California, Florida, Pennsylvania, Massachusetts. I think there's an opportunity here to actually get to that 60-vote threshold in the Senate. Now, what the president will do, that's an open question. But, when you tie this to jobs and the economy, I think you can make a very compelling case as to why, and particularly when the administration talks about we want to export our way out of this recession, we want to promote small business, we want to enhance manufacturing, particularly clean manufacturing, you just go check, check, check with this industry. And so it's our job as an industry, as an organization, to call people out and say, you know what, you said you were with us with this industry, you didn't want the whole bill to go down, here's your opportunity to repeal the tax, keep the bill intact, and we'll see where they stand. Now, the IRS is also concurrently trying to work through how they implement this tax. And I think what they're realizing is there's a very complex supply chain, as you're all well aware in the space, and it's hard to really figure that out. So, there's a chance here, I think, that this device tax could be delayed because of just the complexities of even getting the rule out about what's taxable, how you pay the tax. And this is something that I know the organizations in D.C. have been weighing in on and across the state as well, across the country. Physician Payment Sunshine Act, again, this is something, just want to flag it for everybody. If you pay a doc more than $100 a year, you need to, there's going to be a time in the not too distant future where you'll need to start tracking that. Technically, it was as of January 1st of this year, but the final rule has been delayed, again, because of the complexities here. Latest I've heard, it's not official, but we're hearing that actually the implementation here may actually slip until January 1st of 2013. There's still an outside chance that maybe for the last quarter of 12, you'll have to collect those payments, but by the time the rule gets final, for companies to understand it and implement a strategy for collection, I think it's better than 50% chance now that the sunshine requirements won't actually kick in until January 1, 2013 at the earliest. And we expect the final rule coming out in months. So now I'm just going to shift and kind of talk. This is a transition to politics and then to the elections. And I say politics because the Supreme Court is not a political body, obviously, but it does, I think, traditionally reflect the sentiment of the citizenry and of the country as a whole. And as you're all well aware, a few months ago, the Supreme Court had held 3 days of oral arguments on the health care law, which was really unprecedented to spend that much time on one issue. And, leading up until that point, a lot of the press in the administration was saying it would be unheard of if they actually unwound and struck down the individual mandate and the law as a whole. But if you listen to the oral arguments, I think and again, you can't base the final conclusion on oral arguments, but based upon the questions that the justices were asking, particularly as it relates to the individual mandate, I'd say the majority of the justices really, it's 50-50 as to what they would do, maybe even 55-45 in favor of striking it down. And the key issue here is that they couldn't come up, the government could not come up with a limiting principle, meaning that if you require people to buy health insurance, what is that line where you cannot require the citizen to buy something? And their inability to articulate that limiting principle, I think, is really, the weakest part of the case that was made and will maybe what hinges on the final decision. No one knows, and we won't know probably June 27th. That's when people expect the opinion to come out. So no one has a crystal ball. It's very murky to figure out how this is going to play out. I mean, there are some different scenarios here. It's upheld in full. I'd put it maybe just south of 50%, but close to 50-50, call it, that it's upheld in full. It could be that the mandate is struck down, the guaranteed issue, the pre-existing conditions, all the insurance stuff is struck down, but everything else remains, including cuts to hospitals, the device tax, everything else. But a lot of this, the device tax and other cuts were predicated on this windfall that industries would receive with the additional beneficiaries. And if the mandate goes down, there's no way to compel these people to purchase health insurance. I think there's a great argument for all those other constituencies to say, well, then these other elements of the bill should not be in place as well. There's a possibility that it's all struck down because the justices don't want to go in there and piecemeal and trying to put themselves in the position of the Congress and say this stays, this goes. And there's also a scenario, and maybe if I'm putting odds here, maybe the last one here, that the majority of the bill is struck down, but for the Medicaid expansion. I think that is something that neither party really argued that the government didn't have the ability to expand Medicaid. But nonetheless, that was an issue that the court wanted to hear from on as well. And so it's, this is really an open-ended, we won't know for the next, say, 6 weeks or so. I think up on the Hill right now, they probably want to hold off on moving anything healthcare related until the Supreme Court acts. And so, all eyes will be on the court as they move forward to the oral argument. But rest assured, in this transition to the political side, regardless of how this case plays out, it will impact the upcoming elections. Because if it's struck down, you're going to hear from the administration that activist judges on the Supreme Court undid the will of the legislative body, and that's why you need to reelect me, because I will be able to appoint Supreme Court justices who will, in his eyes, follow the Constitution. From the Republicans, you will hear this president spent nearly 2 years on an issue that was more of a pet project, wasn't related to job creation in the economy, and it was found unconstitutional. So I think those are the two narratives that you'll hear if it's struck down. If it's not struck down, I think it will add some fodder for the Republican base to get out and try to move the Senate and the presidential election in a way that that will help enhance the chances that it can be repealed legislatively. But when you look at the map here as well, and again, this morning, the Gallup tracking poll has Romney +3 at the national level. But I'll just tell you, the national polls mean virtually nothing. It's an electoral map, as you all know. And when you just look at the map here, a few things have to, and Obama certainly has an easier map to get reelected than Romney does. In order for Romney to get reelected, he has to, in North Carolina, Virginia, and Indiana, traditional Republican states, all went for Obama in 2008. Romney has to pull all those back in his column. In addition, he has to win Ohio and Florida. So if those 5 states don't all fall to Romney, it's very hard to put a map together where he will win. If he is able to do that, and again, it's right now, he's down in Ohio and slightly in Virginia, but it's 6 months in eternity. If he is able to pull that off, then one of 3 additional states need to move in his column, either New Hampshire, Colorado, or Nevada. So again, it's 6 months is an eternity here. And this, again, assumes that Obama is going to win traditional Democratic states like Wisconsin, Michigan, and Pennsylvania as well. So it's going to be it's going to come down very close, I think, very similar to the 2004 election. But it's something that, again, it really comes down to probably 12 states or so, and when you even break it down, maybe 6 states that will drive this election. And I was actually down at an event in Florida last week, and I apologize in advance because they were going to get bombarded from both parties, being a swing state. I think here you may have a few advertisements, but I think most folks feel that Minnesota will likely to swing to the Obama camp. So in the Senate, right now, the balance of power, 51 Democrats, 2 independents who caucus with the Democrats, so that gives 53 votes for the Democrats, 47 for the Republicans. So the 33 seats up in the Senate. 23 of those are ones that the Democrats have to defend. Only 10 are Republican. So when you have that type of map and you're defending more turf, it's you have a harder hill to climb here, and even harder when those are open seats, because an open seat tends to be harder to defend than obviously an incumbent. Maybe I guess you can argue now incumbency is not a great thing given the approval of Congress right now. Republicans are defending 3, and the reason in that open I put Maine there, I can actually, if Olympia Snowe had stayed in as a candidate, I think Maine would have stayed in the Republican column. Now it looks like an independent's going to win. He's going to caucus with the Democrats. Right now, again, long time before the elections, my gut is that the Republicans pick up 3, and it'll be dependent upon, the vice president can be in a position to cast that final vote. And interesting, last night, there was an Indiana primary, and Dick Lugar, who was a longtime veteran of the Senate, viewed as kind of a moderate Senate, lost to a Tea Party candidate in Indiana, and that actually, I think, has enhanced, Congressman Donnelly is more of a moderate Democrat, has enhanced, at least putting that seat more in play than it would have been. People are trying to say, well, this is the rise of the Tea Party, and the moderate Democrats, moderate senators are kind of falling out of favor on both sides of the aisle. There is a bit of truth to that, but the real problem was that Dick Lugar hadn't lived in the state of Indiana for 36 years. He was a resident of D.C., and that disconnection to I think the state drove more of that election than the broader macroeconomic environment. So moving on to the House. Again, here, if you see the dynamic where Republicans hold a fairly substantial majority as a result of the 2010 election. I think most people feel that Republicans will probably lose maybe half dozen to a dozen seats as it stands right now, but there's a lot of redistricting going on. I think Minnesota just completed their redistricting process a few weeks ago. There are certain states where it's not complete, and no one really knows based upon what the final maps look like in the statewide, but to suggest that Republicans, will maintain the House as a slam dunk, absolutely not the case. I mean, the American public, for the first time, would like to vote, the majority of the American public would like to vote out the entire Congress Republicans, Democrats, and bring a whole new crop of folks in. So, nothing is safe right now. But again, if I'm betting right now, I think the House leans slightly to the Republicans. And then I'll just close and then have time for questions. Any questions on the election? Why don't we take a step back? Any questions on the election or thoughts on that front? All right. Well, then the final slide I wanted to close with, and again, and then I'll have time for quite a few questions if folks have them, is kind of where I start off. And I know you're all focused on trying, and right now we're well aware of the data out there. I think when we put testimony together, Ross Jaffe testified up on Capitol Hill about a month ago, when I think the data was that in 2008 there were 118 Series A financings in MedTech. In 2010 that was down to say 60, and I think in 11 it was down to 55. And as far as dollars, it was $720 million for MedTech startup Series A in 2008. That's dropped down to, I think, just about $200 million. So, I mean, dramatic drop-off from MedTech startups over the past 3 years. When you look at, as we say on the Hill, that's a problem for the large companies because that's the pipeline. They're the early indicators for innovation, improved patient care, for job creation. So that downturn is being felt. And I recognize that those of you out there trying to raise money, that is your first and foremost priority. But recognize that there is a very effective and efficient way to engage your members of Congress. I mean, a lot of the stuff we have baked, LSA, others, can make it very user-friendly for you to engage in Washington. It could be as simple as making a call, leaving a message, sending an email. And for the companies in the room as well, I mean, as I say here, you're the trifecta. You're small business, you're job creators, you're lifesavers. If you have a facility with 20, 30, 40 folks, inviting a member of Congress to come and tour your facility and see what you're doing and be able to touch that, they get these issues, hundreds of issues come across their desk on a daily basis. And if you can get them into your environment and walk and have them touch and see what you're actually doing, that makes a difference. Republicans and Democrats as well. So you may think, well, why would they want to come and see what we're up to? But they do. And so the extent you can open your, and again, we can help facilitate those tours as well. Open your doors up. And it's kind of inspirational. I think your employee, it's open door policy. Republicans, Democrats, anyone who wants to come in should be able to do that. I think it's something your employers will get a lot out of as well. And then again, I think it's important you work with LSA, MDMA, and others to ensure that your voice is heard, because the stakes have never been higher. We have a chance here, I think, over the course of the next 6 to 12 months will determine, and I'm not trying to overstate things here, but I really do believe that the policies and the activities of the next 6 to 12 months will determine whether the U.S. is able to maintain its leadership position in medical technology, or we're going to let other countries catch up faster, and unfortunately maybe surpass us down the road. And so again, I think the technology, the innovation coming out of the space is extraordinarily exciting. The opportunities are great. I think that the winds in Washington are blowing. We've had headwinds for a while. I think the wind's starting to turn on us. We just need to take care of that momentum and continue to build off it as well. So again, thanks to all of you in this room who've actively engaged on that, and happy to take a question or two if there are one. So thank you.
Hi, Mark. Thanks for taking the question. I wonder if you could kind of highlight what you see are the differences right now between MDMA and AdvaMed's position on some of these key issues that you're talking about, or maybe there were areas where they're coordinating together.
Yeah, we've been working very closely on a lot of key issues. FDA, we were negotiating very close with them, making sure that we had aligned on the positions and spent an inordinate amount of time with their team, and we have a lot of cross members. So on that front of the device tax, I think we're pleased that I think that this has become a higher priority to repeal the tax over there, and I think now we're obviously both pushing forward for the repeal. So I think that the relationship has been very constructive, and hopefully will continue, and we'll have some success. Great. Thank you very much.